Across private equity and venture capital, younger managers, principals, junior partners at firms, even down to the associate level, we're increasingly seeing them leaving firms and setting up boutique organizations themselves. And that's to do with what's happening in the wider industries. If you're a mid-sized firm, you might be managing a fund of, in VC, 300 million to 500 million. Due to the dynamics of venture capital, it's very difficult to 3x that fund. So if you're a more junior team member at that fund sitting on a small slice of the carry, the probability of you getting paid from carried interest is relatively low. You can go and raise 20 or 30 million yourself. And because it's so much easier to 3x or 4x or more a 20 million, 30 million fund than it is a 150 million, 200 million, 300 million fund, your chances of delivering a great return for investors and being able to raise a fund too, and producing life-changing amounts of carried interest for yourself are just radically higher than if you were to stay at a middle-sized firm and try and help them raise their fund 5, 6, 7, etc. And the reason this is exciting, there's a couple of factors here. So firstly, the market benefits from more people trying different approaches and different theses and looking at different ways of investing. You're not answerable to seniors or an investment committee who have a more rigid thesis or approach or focus. Statistically, first and second time fund managers are some of the best performers in the market. If you look at it even in the mean, they tend to outperform more established managers. The fact that the fund sizes are smaller and therefore easier to return. And then secondly, the people who've started those funds are essentially entrepreneurs going out on their own journey, and they have that hunger. It's something they own, it's their baby. They can go after a thesis that they care about. They can really go after a niche that they know a lot about and that they can see an opportunity in that maybe the larger firm they were at didn't see. Net, what the market ends up with is more investors focused on interesting new areas, which is good for founders, it's good for progress in general, and then also LPs benefit from more choice of emerging managers to go after, and in theory, better returns.